Good afternoon, traders, and welcome to the In the Zone Daily ACD Recap for Monday, May 23rd, 2016. In these recap videos, I go over the best ACD setups that occurred on this day. These videos are intended to show the type of trades the ACD method offers on a daily basis. Let's get into today. Okay, coming into this morning, we had a narrow range pivot range. Okay, so our pivot range is this purple area. We've got a pivot range high, the daily pivot, and the pivot range low. Okay, you can see this is a very small pivot range, and that usually points us in the direction of volatility. And a lot of times, if it's going to be a volatile day, you will gap away from this narrow range pivot range, and then you will have either a push in one direction all day, or you'll have wide swings that push back and forth. But today, there's one instance when the narrow range pivot range doesn't point to volatility, and that's when the opening range engulfs it. And that's what happened today. If you notice here, our opening range, we use a 10-minute opening range. This first bar here marks the high and the low of the first 10 minutes. That's our opening range. And this engulfs. You can see that the pivot range is inside the opening range. And what that tells you is that the market sentiment hasn't changed, okay? And that you're likely to see chop for a good part of the day, and then it'll resolve itself in either an up direction or a down direction. And today, we basically stayed sideways for most of the day. We had one little push here down at the end of the day that couldn't quite make it to the A down, and definitely couldn't spend 5 minutes there. So we have a 0 macro score day, and so today there's not much to talk about. It was a very slow and painful boring day today, and there's some places that you can take some trades, but that's not the type of trading that I like. I mean, you can fade the high of the opening range here, fade the low, fade it again here, again faded here, but I'm not into that type of trading. I don't like to do that. Now, I got a question over the weekend on Twitter about do I take opening range breakouts and break down trades, and exactly what are we doing with the opening range? And so I wanted to take today to address that question and try to answer it. Okay, and one thing that you need to understand is that the type of breakout that we're talking about is not. Let me take you up here. Okay, the first breakout was to the downside here. Okay, so this is our opening range, and then on this third bar here, price pushes down and breaks the bottom of the opening range, trades below the opening range low. This is not the type of breakout that we're talking about. Okay, we're not taking this kind of breakout on the ACD method. Also up here, you can see that we took out the high, and this is also not the type of breakout that we're talking about when you're leaving the opening range. Now, on trend days, okay, a lot of the times let's say you have a trend up, okay, and the bottom of the opening range is likely going to be the low of the day, and that first break above the opening range high, would have been a great place to get on board, okay? But that's not how the ACD system works, okay? What Fisher did was he believed that the opening range was statistically significant, okay? And so you can see that by today's action that he's right, okay? Our first 10 minutes is our opening range, and you can see the price stayed within that range all day, okay? With a couple little peaks above and below, but basically it stayed within that opening range. And so the first 10 minutes is very important, okay? That opening range is very important. But just because you leave that area doesn't mean that you're going to have a breakout, okay? And so what Fisher created was a time and price filter, okay, for opening range breakouts. And so here's our opening range, okay? And the price filters are the A points, okay? The A up here and the A down, these yellow lines. If price can push to the price filter, okay, then that's one part of the equation. The next part of the equation is, can it spend time there? Meaning, can the market get market participants to accept, like let's say in an A up situation, can they get the market participants to accept higher prices? Okay. And on the downside, if price were to leave the opening range and come down to the price filter of the A down and can spend half the time of the opening range there, then the market is getting market participants to accept lower prices. Okay. These A points are great points of rejection. Okay, because it's about as far as the market can push before somebody steps in and says, hey, wait a minute, that's too far. Okay, and pushes the market back into the opposite direction. So in order to get a breakout with the ACD's method, you have to have both parts. You have to have the price filter and the time filter. So price needs to come up here to the A up level. It needs to spend at least half the time of the opening range, which would be 5 minutes in our case. Once it does that, then Fisher says that there's a good likelihood that since they've accepted price at this A up level, that price is going to continue to move in that upward direction. Okay. Now the opposite would be said for the downside. If price moved to the downside and was able to confirm, spend enough time at the A down level to confirm that A down, then chances are price is going to continue to go in that direction. Because I'm trading the ACD on the ES, it is an index. And because it's an index, it doesn't trend that well. It only trends 18 to 20% of the time. Okay, will you find a trend day? Okay, now you'll find all kinds of variations. Let's say you get an A up that confirms, and then price continues to move in the upward direction, but it really doesn't turn into a full-fledged trend day. Or you can get a full-fledged trend day where the low of the day is in the opening range, and price just trends higher all day, and it closes on the high. Okay, these are not the normal cases. With the ES, it tends to be a reversion to mean type of market, which means that these A points, especially on the first touch, okay, are great points to go in the opposite direction because of price being pushed back towards the mean. Okay, so if price leaves this opening range and moves up to the A up, I like to fade, okay, go in the opposite direction. So if it's moving up, I want to go short, and I want to push it back down towards the mean or the opening range. If it can get back into the opening range, then I'm looking to see if it can't push all the way down to the opposite A, because if it can't confirm this A up, and it's likely that we're going to have an A confirmed for the day, then the A down might be the A that gets confirmed. And so if I can fade here, gets back in the opening range, keeps pushing down to the A down, now this is a great trade. And then everything is flipped. You can flip everything. Same thing on the downside. If the market moves down, you want to fade, which means you want to buy the A down on first touch, and then have price push back into the opening range, and then continue through the opening range and possibly confirm the A up. So you need to get in the habit of learning to fade these A points, because the mindset is it's not going to be able to confirm it. Okay, on the first direction is a fake out. Okay, is the thinking. Okay, now sometimes that thinking is wrong, but what I'm trying to say is that most of the time there's a high probability that you will at least get what I call a smackdown. Okay, the market pushes up to this A point, and the market says, hey, wait a minute, you've gone too far, and smacks it back down. Now if it can recover and get back up and confirm that A, then of course you've got a good chance that market's going to continue to go higher. All right. So that's the basic information of the ACD method. Is you have an opening range, okay, and you have an A up point and an A down point. And if it can push to one of those points and spend time there and get the market to accept price there, then chances are the breakout is going to continue. Okay, so the breakout is not a breakout above the opening range high or a break down below the opening range low. That's not the breakouts that we're taking. We want the market to commit. Okay, and the market will commit when it confirms an A. Okay, and that's the commitment that we're looking for. Now we're ready to go in the direction of the breakout. All right, hopefully this has helped you understand that we're not just taking a breakout of the opening range or a breakdown of the opening range. We're waiting for a time and price filter to confirm. And like I said, I have found that these A points on the first touch is a great opportunity with a small risk to go in the opposite direction. All right, guys, I've gone on too long here, and hopefully tomorrow will be a more tradable day, and we'll talk to you then. See you later.